calling it a bloodbath, fixed strike vol space, and it provides a Vanna bid to the S&P. So what do I mean? We anticipated that the S&P vol will get hit, the vol reset that we were saying post CPI. Now, what happens when you get this type of move? Generally, if dealers have been taken out of a load of downside puts and have been given a load of upside calls, which clearly happened because we saw that big bid to protection come in from last week, dealers were definitely in a position where there were short downside options in the front end and there were likely long upside calls in the front end. So when you get this material shift in volatility, all the strikes across the whole surface kind of get slammed, which we can see here in this kind of sea of red where everything's come down by about 1 to 1.5 vol points. What happens is that the dealer's delta exposure changes quite materially, and that's called Vanna. So that Vanna effect is when volatility moves, it changes the delta of options. And so if dealers are all short puts and long calls and the vol shifts lower, the dealers become shorter delta than they were previously. And what do? To rebalance that short delta, they have to buy futures.